Hello, this is Monica Sawyer. Welcome to Real Estate Investing for Women, where we focus on all aspects of real estate investing, including strategies, mindset, emotional mastery, money smarts, and so much more to ensure your success. If you'd like to learn my personal favorite investing strategy, just go to blissfulinvestor.com. You can also listen to this episode on the Real Estate Investing for Women podcast on iTunes. Now, let's welcome our guest. Today, I am so excited to welcome back to the show Kathy Fettke. Kathy is co-CEO of Real Wealth Network and best-selling author of Retire Rich with Rentals and host of the Real Wealth Show and Real Estate News for Investors podcast. She is an active real estate investor, licensed real estate agent, and former mortgage broker, specializing in helping people build multi-million-dollar real estate portfolios that generate passive monthly cash flow for life. With a passion for researching real estate market cycles, Kathy is frequently a guest expert on CNN, CNBC, Fox, Bloomberg, NPR, CBS, MarketWatch, and the Wall Street Journal. She was also named among the top 100 most intriguing entrepreneurs by Goldman and Sachs 2 years in a row. Hello, Kathy. Welcome back to the show.
Thank you. What interesting timing. We'll have so much to talk about.
I am so with you, and I'm so pleased that you were willing to do this sort of on such short notice, because I think it's important that we all get a little more perspective, right? Like,
Yeah.
What are my people thinking? They're thinking, should I buy? Should I sit on the sideline? Should I sell? Should I freak out? What should I do?
Or all of the above.
All right. I'll just say, don't freak out.
Yeah. Don't freak out, and definitely don't watch too much sensationalized news. It will, it will make you sick. So
That's right.
Really,
That's right.
be
That's right.
careful
And
about what you intake.
that's right. And I think I actually am part of a lot of WhatsApp groups right now. And a lot of what people are posting is the sensationalized news, right?
Yeah.
And at some point, I think it was on Monday, I just posted to everybody, you know what? Use the news in ways that can support your family and you and the people that you love.
Yeah.
Don't use it to freak yourself out.
Yeah.
It's not serving you, right? We can choose what we decide to look at and listen to. Don't listen to that stuff that freaks you out.
It's probably never been, we've had it pretty good for the most part. And my husband and I have been watching more Netflix than normal, I think, as other people are. And for some reason, he always wants to put on things like Contagion or 1917. Like, great, that's not helping. But at the same time, I watched 1917 and I thought, boy, it's not like this is the first time our country's gone through something difficult. The World War I and World War II were very difficult, many, many deaths. We're not dealing with earthquakes or wars right now. This is a situation where we're being asked to stay home. So, like, just wash your hands, stay home, don't have social gatherings, and we'll be fine. So this is not the kind of crisis that I think people are saying. The crisis is really, in the hospitals, but let's focus on real estate, and let's do what we can to protect our healthcare workers, right?
Yeah, absolutely. Yeah. So tell me, let's start talking about real estate. So tell me what's going on out there.
Well, we had a big discussion this morning with our team, and this fine line between being a pessimist, being fearful, and being prepared. And the way I look at it is, you won't be fearful if you're prepared, or you will be less fearful. And being prepared means being aware. So we've got to know what's going on. It's just, a lot of times the way the news is presented, it is more scary than it needs to be. We need to really look at the statistics. And, if you do look at the statistic, there's a lot of things that can, I just one example. I was listening to a podcast on how deadly this disease is. And as I was listening, a car flipped out of control, came head on towards me, missed me by a hair, spun out. And I was like, wow, there's a lot of dangers out there. We just need to, stay centered, stay focused. But with real estate, there is going to be an impact. We have never before had a situation in this country where the economy just shut down and people stayed at home. So that it will have an impact, and we need to be prepared for that. But what we're also seeing is that the government is stepping in ways that it hasn't before. And we do have an unusual situation with our monetary system today where they can create more money. It hasn't always been that way. It's not necessarily great for the economy, but it is going to help us through this. And that's what we're seeing, more and more services to help people who can't pay their rent, who can't go to work. And for landlords even, there's forbearance options. If your tenant can't work, but you still got to pay the mortgage, well, you can call your lender and talk about it, and maybe just not even have to pay your mortgage right now. You'll have to pay it later. Doesn't affect your credit. Check on that to verify, because every lender is different. Certainly if it's backed by Fannie and Freddie, there's more forgiveness there on these forbearances. So we're going to see more and more government support of this situation. We have a president who would really like to get reelected, right? So he's going to give it everything he's got to keep the economy afloat while saving lives. So one thing to think about, as I'm in residential real estate, I think you are too, what we're being asked to do is stay at home. And that's a key word. It's like, that's what we're providing people, a home. So our assets are more valuable than ever. That's the way I look at it. And depending on what kind of real estate you're in, you do need to pay attention to how things will change, because they will. Things are going to change, but the economy will keep going. It's just going to be different, right? So restaurants are doing takeout, right? Amazon is delivering packages, but they're the same products that, we bought in the stores. Now we're just having them delivered. So the economy is going to keep going. We're probably going to see more manufacturing in the US, right? We're realizing that was a bad idea to be totally dependent on our products coming from overseas. That'll be good for real estate in different ways as more factories come, as more workers are here. So at the end of the day, that if you're in residential real estate, we are offering a great, great service to our country by providing the homes that people can protect themselves in. I happen to be and have always preferred, and I know I'm alone in this, but not alone at all, but it's my preference, single family. It's something I understand. I've watched people in multifamily and I've been jealous and like, oh, I wish I knew how to do it, but I just feel more comfortable in single family. And that is something I again, because I understand it. And then what we're seeing more is that a lot of people want to live in their own house, so they have a yard. They're going to be stuck inside for the next 3 months. They want a yard. So in that sense, I'm really happy that that's kind of the decision that we've been doing and helping other investors do. Not to say that apartments aren't going to also do well. It's also a dwelling that people need. So, that's a big summary, but we're going to see changes. We need to stay on top of it. There's going to be a lot of support for us, but there's also going to be people who get very, very hurt by this. And that is something I think you had me on, and I think I talked about it. I know my 2020 forecast, I do a forecast every year. Mm-hmm. And in my forecast, and I think I discussed it with you, I said, things appear to be really strong in the economy, but there are underlying issues that people are not paying attention to. And it's a lack of understanding of fundamentals. And because of that, people are investing in companies that have never made a profit. People are borrowing too much money, not seeing cash flow, going way too high on their LTVs, and just believing that the economy will keep being great forever. And I can assure you, if you just do a little tiny bit of historical research, that's never been the case.
Yeah, we wish, but it wasn't. Right.
So it's just a pattern that, and this is what I said, like, things appear to be good, and that's great. We're still doing deals. We're buying land. We're entitling it. We're building homes. That's typically very risky. So we were still doing deals, still helping investors buy rental properties nationwide. but we were doing it with that in mind, that things are good, but they're always good before they go bad.
Yeah.
Always.
Right.
That's just the
Well,
pattern.
and
Of,
they're always bad before they go good too. I mean, it's a cyclical market, right?
yes.
And we have to expect that. It's historical, it's proven. We have to expect that, right?
Yep. And
And
what is shocking is most people don't.
right.
Yeah.
Right. And then they're upset when it corrects or when it
Yep.
changes. That's the
Yep.
evolution of life. Our economy has evolutions also and cycles also, right?
And it's the same cries from the public saying everything's so expensive and I can't afford rent and I can't afford to buy a property. And
Mm.
when you start hearing those things, that's when you need to be cautious, because that's a sign. That's a sign that we have gone a little too far and there will be a correction. And when prices go up so quickly, that's when the builders come in, and that's when people take risks and they think it's going to go forever. And every single time there's a group of people, 80% maybe, who are surprised by it, and they shouldn't be, because historically it happens every time. And it's usually when things seem to be at their best. So, here we are in what is probably a reset, and a needed one, because things were lacking affordability and people were having a difficult time just living. I mean, you're in the San Francisco Bay Area, you could make $100,000 and be broke, right?
Right. It's so
And
true.
I think that was the poverty level. I think there was an article about that.
Yeah. There's a word that you just said that I really want to highlight for everybody. I think we're in a reset. Reset. How
Yeah,
about reset rather than crash? Right? And for me, Kathy, that I'm all about bliss, right?
yeah,
Like seriously, the languaging that we use is
yes,
so important, right?
yes,
We're in a reset. And it is necessary, right? Like you say, $100,000 is the poverty line. There's something wrong with that,
yeah.
right? And we know that intuitively, but we want to ignore it because of hope. And what I like to say to people is hope is not a strategy. It's awesome, it's needed, it serves us, but it's not a strategy.
Exactly.
So anyways, I just wanted to put that in there. Keep going.
That's it. And that's why for the past several years, we have been looking for the little parts of the country where things were still affordable and things were still in balance, and the average person could afford the average rent, and there were jobs that were growing, and a lot of employers moving to those areas because they want to be able to pay their employees a fair salary and that their employees can live well. So we've been, for years helping investors buy rental homes in Texas and Florida and Georgia and Ohio and Detroit, even, where we're seeing a big comeback, and where we could still find homes for $80,000 that were all, after all renovations, that rent for $1,000. So those were still some of the deals we were doing, and those areas we think will hold up pretty well, because if you're in an area where the average person, the average is, remember, the mass, you take the mass, you take, what most people could afford, that's the most people. So if the average person can afford the average rent or the average home, that means they're not going to feel it as much. They're just not. And even if they do, in the past, some of these linear markets, they're boring markets. They don't go up a lot and they don't go down a lot. These are areas where even if there is a reset, it's going to be very small. Now, in areas that boomed maybe too much, where it was really, home prices and rents were way out of line with salaries, those areas might feel it more. In addition to the fact that usually there's more money in those areas, and that money is invested in the stock market. And nearly every time there's a reset, that's what happens first. The money is lost from the stock market, and then they can't buy all these things, and then jobs are lost, and it sort of goes from there. So, not to scare anyone by any means, things always come back, but it will be probably felt more in the areas where it got out of hand, where just prices got too high. And that would be the San Francisco Bay Area, right?
Right.
But again, caveat here, if you own your home and you're not going anywhere and you're going to live there and prices go down, don't worry about it. They'll come back up. because it's, most of these resets, they're 1 to 2 years, and then things take off again. Right.
Right.
So if you're not forced to sell your home, you'll be just fine. So just hang in there. If you need extra money, rent out a room,
I'm so
uh,
with you on that, because there are people also that are not able to afford their rents. They're going to be looking for some space, right, where they can still continue to live and can afford their rent, right? And I've always said this happened for me in 2008 too, where a lot of my properties dropped their values. I'm sure we're seeing this everywhere,
yeah,
and so many people were starting to sell houses. Like they do in the stock market when it's down.
yeah,
And the thing is, you don't actually lose money until you sell.
right.
Right.
Yeah,
So if you've got the wherewithal to just stay, paying rent for yourself, right?
yeah,
Paying your mortgage.
yeah,
If you don't, and this is something I'd love for you to chime in on, is if you can't continue to pay your mortgage, what are some of your options? Well,
yeah,
you could rent out your place to
yep,
somebody that can. And this is what saved me in 2008 is we couldn't afford our house because my husband lost his job. But we went and bought something in a place where we could afford, and we rented out our current place
yeah,
and were able to cover the mortgage with rent. So, and even had we needed to take a little bit of a negative cash flow on that, fortunately we didn't, but had we, it still would have been worth it for us rather than losing the house, selling it at a loss, whatever it was upside down. So we would have had to sell it short, right? So
yeah,
making wise decisions in a time rather than freaking out and going with our gut knee-jerk reaction is to really pay attention to what can we do to keep this even keel for ourselves, and so that we can benefit from the upswing that will follow. It may take a little bit of time, right? But it will follow. It always does, right? So this is real. It's such a good conversation. So I do single family homes too, and it's that same experience. People always need homes. They need homes that are reasonably priced, that are fun to live in, right? That make them feel good or become their sanctuary, so that all of that stuff that's going out in the world, they can be sort of secure and safe from, right? And we all
yeah.
have to live somewhere. We all have to pay rent, right?
I really think with this, I'm not sure we'll ever be the same after this.
Mm-hmm.
I hope, I hope we are, I mean,
Mm-hmm.
I've never worried about germs ever in my life. I mean, this is a gross story, but I was at the hospital with my sister and I was eating something and I dropped it on the floor and I picked it up and put it in my mouth, just not even thinking. And the doctors and the nurses stopped what they were doing and just stared at me like, do you know hospital floors are the dirtiest thing in the world? And I was like, oh, well, germs are good for me, stronger. So I've never, ever worried about germs. I'm not that way anymore. Now I am not going out of my house. I am washing my hands. I'm not letting anybody over. I mean, this will pass. This will pass, but I think it will stick with us for a little while. And that tells me that's kind of a sign that there might be more and more demand for the single family home, for the yard, the space, not sharing air, and, that at least gives me comfort because we are building subdivisions nationwide, and it's a big question. Will people be buying these? Now, fortunately, we kept it at affordable levels. We're not building any luxury homes because I did look ahead thinking, there could be a slowdown. There could be a reset. Are we ready? We didn't take any construction loans, no short-term bridge loans, no balloon notes, nothing like that, because just like you, I went through this before.
Mm-hmm.
And things were great before suddenly they weren't. And if you had a loan that was due, there was no way to refi into a new one. There was no liquidity. You just had to figure it out. We had 2 construction projects going. The loans just completely disappeared. And we had to hand those properties back to the bank because our credit was perfect, but there was no money.
Right.
Couldn't lend it. So if we have that kind of a reset, and we don't know, we don't know, things could rebound, things could take a little longer, but it doesn't hurt to prepare, right?
Right.
In fact, we must prepare. So if you look at the things that happened last time, liquidity disappeared. People had credit lines and suddenly they didn't. So you could be in the middle of a construction project and suddenly your construction loan is gone. So one of the things, in retrospect, that I think is a good thing is to get liquid, get as much cash as you can. So if you have a credit line, you have an equity line, maybe you just take the money out and you put it in another bank, or you put it somewhere else so you have it. If it's in the same bank, they'll just, take it. But, that's what a lot of people did, is they refied back then in 2008 when they could. They still had their jobs, market value, property values were still high. It takes a while, for real estate's a slow moving vehicle, right? So some people refied, took their cash out and just put it in another bank for emergency, right? Just to have it there.
Mm-hmm.
And the same with, again, I went into the bank in 2000, I don't know, 6 or 7, and the banker said, "Hey, would you like an equity line on your home?" "Yeah, sure." "Okay." And I, in 5 minutes, I had a $250,000 equity line. I was like, "Oh, I didn't even have to qualify. Cool." What I didn't do was take that money out. And the next day, like a year later, that was gone. So it would have been nice to have that cushion, right?
Mm-hmm.
So take advantage while there's still time. If nothing happens and it's business as usual, no problem. You just put the put the cash back or pay off loans or whatever you do with it, invest. But if things do get difficult, then you have that cushion.
Yeah. So interesting. So I always have an equity line on my primary residence.
Mhm.
And the way that I use it is as a credit card, right? It's a much cheaper credit card, right? My rate's 3.5 rather than
Yeah,
whatever your credit card is.
yeah,
I never even considered taking it out as a lump sum and putting it somewhere else. But
mm.
what a great tip, because we didn't lose our equity line, but I
Yeah,
also didn't need it in
yeah,
those times, right?
right?
So who knows what would have happened. So
Yeah.
just interesting. I love the different perspectives, right? Like each of us have sort of had a different experience. One of
Well,
the, go ahead.
yeah. I mean, I just, we just don't, if anybody tells you they know it's coming, they don't. We've
Right.
never been here. We've never, the world, human beings, we've gone through a lot. We've gone through much, much worse, much
Mm-hmm.
worse. We've had much less technology, much less information, much less access to information. I mean, there's never been a better time to have a crisis, right?
Mm-hmm.
Because
Right.
now you've got thousands, if not millions, of brilliant people sharing data and sharing information, and they can do it like this. And it's incredible what we have, the resources that we have today. And we may have a solution tomorrow.
Right.
So that's the good news. But we also don't know, and we don't know if we'll get that vaccine, and we don't know if this thing's going to last 2 months or 10 months or 2 years. So we just need to plan for it.
Mm-hmm.
And like a few ways of doing that, like I said, be liquid, do your refi, rates are low, just get that cash out. I personally would rather have cash in a safe, like where I could get to it, than in my home, where I can't get to it. Because if things got bad, this is just a if, you won't be able to get it. There won't be loans. Already the fear that portfolio lenders have is, oh, if people are not able to work, we don't know how long these quarantines are going to go. Why should we lend? So a lot of portfolio lenders have already pulled out. So already a lot of money that was on the table and being lent is not. And flippers are experiencing this right now, where they bought a property and they have a private lender they've worked with for years that just, they're just going to lend them the money. They're going to fix the house, sell it. That lender's not there right now. Not all of them, but some of them.
Mm-hmm.
So, we're already seeing those kind of changes. Now, if this thing's over and we are back in business and America opens up again and everybody's back to work, those lenders will come back too. Fannie and Freddie, on the other hand, are in business, and that'll be backed by the U.S. So home sales, it'll be interesting watching, moving forward. But, I think the U.S. government's going to do everything they can to keep, home sales going. It's just again, the portfolio lenders, be careful. That's why on our build projects, we didn't get any loans at all. We
Right.
raised enough money to buy the land and build the houses, and no loans. So, just in case.
So I know that you do a lot of, so you actually have built you are building and you're selling properties and you work with some turnkey operators in some different markets, right, that you trust and have vetted and have actually purchased with, right? So, and I have a very similar circumstance where I've got some turnkey vendors that I work with. And what I'm hearing is that people are deciding to not purchase right now because they want to stay in cash.
Yeah.
Are you finding the same experience or?
Um, it's across the board. So
Okay.
we are a really large network, and I've been doing this a long time, and we've got people from all over the world that, kind of follow us. And so we have some people, we just had a meeting this morning and no contracts have fallen out. One of our property providers in Ohio called me and she's like, I'm just not sure I've got 12 properties I just finished. They're rented, they're ready to go. And she sent out an email to our members and they were sold in minutes. So
Okay,
that's
good.
12 properties out of 50,000 members that we have. So
Mm-hmm.
that's 12 people who think it's a good idea to own hard assets.
Mm-hmm.
And that seems to be across the board for us, where we haven't seen a change. If anything, we're seeing more demand for single family. You've got New York City. New York City's never going to be the same after this, in my opinion.
Right.
Because it's a terrifying place to be. So they're moving to Florida, and they're moving to a place where they can have a home and not be locked in an apartment in New York, afraid for their lives, And so we're actually seeing our Florida teams they can't keep up. They can't even, they put something on, for sale and it's gone. So we're
I
kind of seeing
love that, actually.
tremendous demand. I don't know how long that will last, but you've got the combo of low interest rates. We've had pent up demand for affordable rentals already. Already that was already a major issue. That massive demand for living space, and now of course that's going to pull back a little if people aren't working and if the economy isn't as robust. But even there, I mean, yeah, sure, the travel industry going to slow down. Hotels, yeah. Planes that might come back, cruises, I don't know, but we need food, shelter, we need things, technology. Our business is still running. We're using Zoom. That's the same for so many. I don't know about you, but like I'm shopping more.
I actually had that thought last night. I'm like, oh my God, I'm spending so much money on Instagram ads, not on the ads, but what's being sold, right?
Right?
It's amazing.
I just bought, I don't even want to tell you how much I just bought on vitamin C.
Exactly. I know.
So I actually think, we're just going to see things change. But you know what? That was happening anyway. It's just going to happen a little faster. Schools. One thing I would be concerned about is being in the student housing industry. There was a study on which real estate markets might get affected the most. And it could be shopping centers, any places where large people gather. I wouldn't want to be in the event business, the wedding business. I mean, we just don't know how that's going to go. But and again, this soon will pass. Like we'll be back to normal at some point, and maybe more like Asian countries where they know exactly what to do when these things happen. They put on masks, they put on gloves, they don't social, like they know. I think next time we'll be like, stay home, put your mask on, have a backup, have your food supplies. But, so some of the industries that were of concern, one of them is student housing, because this was something that was already projected. I went to a futurist event that I got to have a press pass for at Singularity University, and you're in the middle of the Silicon Valley. It's the beginning of everything, right? Everything is not everything. Things are created. Future ideas are created where you are, and Singularity University is based there, and they're constantly looking at what the next 10 years hold. And at this conference, this was 6 months ago, they were saying there won't be any more really need for universities as it is today, because there'll be so many ways to do VR learning where you learn at your own pace. You've got your VR on, you've got your instructor, your AI is teaching you, and you don't have to go spend $60,000 a year paying for room and board and all that when you can do it in VR. So this was already projected. It's just happening a lot faster. My daughter goes to San Diego State. This was a terrifying thing. She was in Europe when all this happened. San Diego State, told her to come home. We got her home like right the day after flights were being canceled from Europe. And now she just got an email from San Diego State saying, we don't know if you'll be coming back in the fall. So this is going to change a lot of how we do things, and we just have to be prepared for that. But people will always need a place to live. That's not going to change.
Right. So interesting about schools, because the other thing that I hear a lot about, as for my show, for my listeners, is, Monica, how do I deal with student loan debt? Right? Because that's the other thing that's really changed with universities, is this whole debt concept.
Yeah.
And so I absolutely agree with you. And I was foreseeing that as I was hearing those questions, like, this can't keep going this way.
No.
So it was really.
I think a lot of it's going to get forgiven. I mean, at this point, it's going to be like free for all.
Mm-hmm.
It's very possible that student loan debt is going to get forgiven over the next few years. It's very possible that debt in general is going to get forgiven. If you are running into hard times and you do have to go bankrupt, this is a country where you can do it and be forgiven a few years later. I mean, literally after 2008, if you went into bankruptcy, 2 years later, you could buy a home. It's amazing. Our country needs us to keep spending money. So I'm not suggesting you run out and go bankrupt. It's not, I'm not suggesting, I'm just saying that some people will, because they did get over their head in debt, and there'll probably be some forgiveness for that and a restart. So, and the same with foreclosures. So there will be probably foreclosures in the future, but I'm not sure it's going to play out. I don't think it's going to play out the way it did in 2008, because this isn't a housing meltdown. It's almost the opposite. Mm-hmm. It's like housing has become like, this is what people are forced to stay at home, and they're going to probably be working more at home. Kids are probably going to be studying from home. So people are going to want nicer homes.
Yeah.
Right.
Yeah. I love that. I do want to move into the extra section, but before we move out of this portion of the show, I got a couple of questions for you. First of all, how can people get in touch with you?
Sure. Yeah. We are Real Wealth Network. We used to do monthly events in the San Francisco Bay Area and in LA. We don't now. I don't know if that's changing. We used to do tours to our properties. We'd have bus loads of 50 people touring properties. Anyway, we're changing as well. So we're doing online events. Anyway, Real Wealth Network is our website, and my podcast is The Real Wealth Show. And then I do real estate news, which is a daily show. It's 5 minutes, but boys, have I been busy there, because there's been a lot of news to stay up with.
Very, very nice. Thank you for that. And before we close the show, do you have any quick tips or any advice you'd like to give the audience today?
Yeah, I really, really want to emphasize that staying calm is the most important thing. You can be very aware of what's going on, take in that information, and make a plan. And when you've got the plan, the fear goes away. So even if you're thinking, Rich and I were like, we should buy stocks, but we're not experts at that. It's like, well, then you learn. And it seems scary, but then you learn. It's like, well, some of these stocks are on sale. Well, which ones and what? And that made that whole process actually fun. So if anything's scary, or, just get the information you need and stay calm and make a plan and execute it. So, that's all. The fact of the matter is, I think, we don't know the statistics for sure, but let's say at least 90%, probably 95, probably 99% of Americans are going to be just fine. Are going to be just fine. Most people don't even know they're sick. Don't even know they have it. That's the problem with it. They spread it without knowing, and they never even have a symptom. So if you sit in total fear and drink bleach and, do these crazy things, you will die. But stress, and it's been proven that stress over a long period of time will make you sick, and it will lower your immune system, and then you could be in the 1%. So don't do that. Mm-hmm. Stay healthy, exercise, drink a lot of water, vitamin C. I'm hearing vitamin D3. Most importantly, your mental health. This is going to be a time, in my opinion, that we come back, that we rein it in, that we remember what matters. We've been going 100 miles an hour, myself included. And now we're being forced to rein it in and get to know each other again and spend time together and question, do we really need all this stuff? Maybe we just need more time. Maybe we just need more time with each other doing the things we love, like gardening. So,
Yes.
so I think it's going to be I think it's going to be a beautiful outcome in the end.
And I am so with you on that. I absolutely agree with the same thing, is we're really being forced to take a look at the way we've been living.
Yeah.
And like you say, we're resetting. And I
Yeah.
think that reset was necessary, not just in the real estate market, but in our lives, in
Yes.
our homes, in our
Yes.
education, so many places, right?
Yeah.
And part of what I'm doing this week or for the next few weeks is a Bliss series to really talk about how to deal with that stress, because stress is a killer. We all know that, right? How to deal with the stress, how to get more centered, how to start focusing on what's important rather than what's scary. And
Yeah.
the thing that I heard today on Facebook was, let's stay aware, vigilant, but positive.
Yeah. I love that.
Yeah.
This is an incredible opportunity. Again, I know you got to wrap up, but I was watching the world spiral and I didn't know how to help, but my daughters, my 20-year-old daughter said she can't think of one friend. This is very sad. She can't think of one friend who wants to spend time with their family. Not one.
Wow.
And I just thought my kids and her friends make fun of her because she's having so much fun at home with us. Like, we're
Hmm.
having an amazing time. We're playing croquet and we're gardening and we're doing cards and we're getting, it's like time to be together.
Hmm.
And so people, I would say the biggest investment to be made right now is learning how to be in relationship, because you're going to be,
Hmm.
couples are going to find out, oh, this is what it's like to be together, all day. Rich and I have been working at home together our whole marriage, so we're used to it, but most people aren't. And kids are going to have to learn how to like their parents and so forth. So the most important thing to invest in right now would be relationship skills and really personal improvement, understanding how to communicate, how to stay calm, how to be loving, all of these things. This is going to be the most important thing to get us through the next few months or
Yeah.
years.
I'm so with you. And thank you for that. I'll just end it with that because that's so valuable. And I'll just remind you, listeners, before I sign off, remember, aware, vigilant, and positive. Stay blissful. And I'll see you next time. Bye. I hope you enjoyed today's show. If you'd like to download my favorite investing strategy, just go to blissfulinvestor.com. See you next time.